What's up, guys? Welcome back to another video. So today I wanted to talk to you guys about exactly what I'm doing while the market is down and everything is looking crazy right now. All right, so get ready for some free game. We're about to get it. All right, so welcome back, guys. You could tell from my voice I'm not exactly 100% right now, so I'm kind of a little bit under the weather, but I've been getting questions and DMs all week. Everyone's kind of panicking now, like, yo, what's going on with the market? You know, they don't know what to do. And I can't really tell you what to do, but what I can do is tell you what I'm doing. So right now, I am, as I told a lot of you guys before, about 10% of my portfolio is pretty much in risky plays. So you have, those small cap stocks, and then some of that 10% is also Bitcoin. All right. So for right now, I'm putting a pause on all those short plays. So those companies that are really small, in small cap companies, new companies that have the potential to grow really fast and grow much better than, say, a large cap company, but they also have the potential to take a huge loss. Those companies right now are going to get hammered, and the reason for that is pretty much, people don't know these companies like they know something like, say, Microsoft, so they're quick to pull their money out of these small companies and take it somewhere else, cash out, go to the bank, or put it in something else. I have Microsoft up on the screen because traditionally this stock has performed extremely well for me, regardless of the situation. And, Microsoft pretty much is dominant in certain areas. They're pretty big in gaming. They're big in operating systems. And as most of you guys know, I have a tech background. So I've always relied heavily on, stocks like Microsoft and other stocks. But this is just one that I'm, showing you guys now that this is something that I'm putting my money in to. If you look at Microsoft, I would just say, just for example, this week, it is down, a little over 1%. Versus you look at, say, let's look at a small cap company. Let's look at Sense. All right. So Sensonics, right? For the week, Sensonics is down 27%. All right. Now, do I think Sensonics is a solid company? Yes. Do I think they have a solid product? Yes. And I intend to keep buying more. I actually just picked up 200 more shares today. All right. So I'm actually purchasing more of this company. But this is one of the few small cap companies that I would continue to buy. All right. Another company that's not so well known is MVIS, and this is another company that I'm purchasing more of while it's dipping down. All right. This is a company that's not known so much, but I believe in the products that they have, and I definitely see an immediate need for their products. So I only think this stock is gonna shoot up. And the thing with buying these smaller companies is, what you have to remember is that companies like this, that I see a direct need for the product or the service that they have, even though they may take a hit eventually, if they can't recover, or they get to the point where they're like, you know what, we don't want to do this anymore, they'll get bought out by another company, a bigger company that will come along and see the need. Like, I'll just give you an example, like Sensonics. I could see a company like Sensonics being bought out by probably, a health juggernaut like Johnson and Johnson. You know, if it doesn't work out the way they want it to work out, because they do have a product that's FDA approved and it's on the market right now. So they actually have something tangible. It's innovative, and they're the only ones that's doing that right now. Another company which is on the screen right now, which always seems to perform really well for me, is Nike. I don't know what it is, but Nike just has, this command over its customers. They have a very loyal and fanatical customer base, and Nike will just, always do well. So now some people will say, well, listen, I've been buying the dip, and somebody said this before. They've been buying the dip, and the dip just keeps on dipping, and some people are at a point where their funds have been exhausted. What you guys want to do is, one, try to be as frugal as you possibly can. So try to cut corners, save money while you can, and continuously just keep funding your portfolio. Now, a lot of these companies, they're not like penny stocks. As you can see, Nike's $133 right now. Microsoft is like, around like 230, 240, somewhere around that price range. But now you have the option of buying fractional shares. So if you don't have $230 to buy Microsoft right now, let's say you only have 200 to put towards your portfolio this week. Listen, put 50 on Microsoft, put 50 on Nike, put 50 on Tesla or whatever it is, that you want to buy. But I am putting a lot of focus right now on purchasing companies that I know are solid companies, blue chip companies that have been around for a while and just have fantastic growth. Best Buy, that's another company that's performing extremely well. Sin stocks, gambling stocks, tobacco companies, those companies are doing pretty well right now. Someone said today in the chat group that oil companies are doing well. I've gotten burned in the past messing with oil companies, so I'm not putting my money there, but you do your own due diligence. But the point is right now to try and put as much money as you possibly can into these companies. And once this whole craziness blows over, once we get some kind of, financial boost, remember now, people are going to be getting a tax return soon, and that's going to be a stimulus to the economy. Also, we're supposed to have another stimulus check coming. That's also going to boost the economy as well. A lot of states are opening up, and I think that's going to be positive. Once we have a couple of major companies start reporting, positive earnings, I think this whole thing is going to turn around. So right now, your focus really should just be on trying to buy as much as you possibly can of these solid blue chip companies that you know. All right. As far as getting your money up, you guys know I'm big on multiple streams of income. You guys know I'm heavy on websites. My last video that I did on making a website with OpenCart, that one has like 15,000 views. And I don't have a lot of subscribers, as you guys know. So if you guys want me to do more videos on like making money online, just go ahead and drop a comment in the comment section below. Just say do more e-commerce videos, or just say e-commerce videos. I'll put more videos out like that. But there's ways that you can make extra money, outside of your job or whatever it is that you do right now as far as your primary source of income. And that way you will continually have money to put in to what you want to do, which is invest and take advantage of these companies that are, on sale right now. Tech companies are doing really well. I'm seeing a lot of growth with like Sin stocks and a couple of different sectors. But what you want to do is just take a look at what's growing right now inside your portfolio, what's moving, what's probably moving that you were trying to get into, but the price was too high. Now is an opportunity to jump in. All right. So that's it for the video today, guys. I want to thank you so much for watching the video. I hope you found the information useful. And like I said, just, keep holding it down, man. This won't last forever. And when it does blow over, if you didn't take the opportunity to get as much of these good companies as you can, you're gonna regret it. As we saw the same thing play out last year, March, May was really horrible. I was probably down 20K, and I came up off making those purchases during that time frame. All right. Thanks again for watching the video, guys. Again, I apologize about my voice. I'm a little bit under the weather, and y'all have a good day. Peace.